I could individually grow an agency to $10 million in revenue. If all I had to do was focus on closing deals and leveraging technology, hands down, no issues.
With the family office component, the one thing that's unique about family office and kind of a challenge that I didn't anticipate to run into over the years is now family offices are starting to integrate insurance within their family office.
You need to be a strategist. It's not just getting as many quotes as you can from a rater and then presenting the cheapest or whatever else. You need to understand everything about these people's lifestyle, their business, what, all of the things that they do.
I had to be vulnerable with them. I had to let them know where I had gotten in a personal and work-life balance and why I was doing this. And I really had to paint that picture of, it's not because of something that you did. It's something that I need for myself and where I had gotten. And
one of the things we should be talking to our CEOs and CFOs about is their own personal liability relative to just the visibility they have in public.
There's such a big transfer of wealth and new money from business owners and tech and whatnot that it's not something that is very well educated on the personal line side and how they tie together. So lead with that.
So I'm not going to be a slave to a company who doesn't really care that'll replace me literally tomorrow if I walk out the front door, but I'm working 100 hours a week and I'm making good money, but my hourly rate sucks and my work-life balance is terrible and I'll be dead by the time I'm 45 because I'm running myself into the ground. What's up, everybody? Welcome to the Power Producers Podcast, where we are refining and redefining the sales game. Today, we have the principal of PCRG Insurance, Jessica Fukuchi. I don't even know what state she lives in because I've sent her mail in Washington, in Utah. She was in Japan not that long ago, and we're going to talk a little bit about that stuff. But the reason that I wanted to have Jessica on is honestly because it's for a selfish reason. I have so many people who listen to the podcast or follow along with the stuff that I do on social that want to know where I can help them connect with somebody who can handle high net worth personal lines insurance. And I've not really had somebody that I could do that to. And admittedly, I didn't realize that Jessica was able to help other agents out in the way that we're going to talk about today. But I think it's something that specifically with middle market producers, we struggle with because we have business owners and we have highly compensated executives that we're dealing with all the time. And it's not probably something that's on a lot of middle market producers' radar. But if somebody else that's a multi-line shop can go in and they have a high net worth specialty and they can go in and lead with the personal lines, I hate to rain on your parade. Your middle market account's at risk. And I know this because the agency that I started in originally, which is now, back then we were Baldwin Insurance Group. Now they're the Baldwin Group, multi-billion-dollar publicly traded company. We had a very, very high proficiency in high net worth. Laura Sherman, who headed that unit, is one of the best in the country. As far as I am aware, and Jessica is certainly right up there with her. I ain't referring business to Sherman, the Shermanator, okay? It's just not going to happen. I love her to death. She's a good friend, but she also competes with me in the middle market. And I think, we talk a lot about helping your account stay safe by having a good referral partner with benefits. A benefits referral partner, a referral partner with benefits might not be the way we wanted that to come out.
Unless you're married to him like I am with my referral partner being my husband.
Yeah, exactly. Right. So, but I mean, we talk about it in the benefits world that you need to have somebody who's an expert in benefits, that's a benefits only agent. That's what they focus on and, or predominantly focus on, but they're not going to come poach your middle market account if you make the introduction on the benefits side. I don't think agents think about that as much when it comes to the personal lines of the high net worth for a couple of reasons. Number one, either they just don't think their account's at risk because they're oblivious to the fact that it is, or probably worse and equally as common, if not more so, they just think they'll figure it out and handle it themselves. And I can tell you right now, I like to think that from a technical knowledge standpoint, that I'm above average because I invest in my continuing ed and everything else. But I also know for a fact that I know what I'm not comfortable with. And, you can just put in any personal lines and I don't want anything to do with it.
Yeah.
But take high net worth and throw that into the mix. It's a much, there's nuances to it. The markets are different. The structure of the companies are different. You have regular companies, some of them are reciprocals, and you need to know how to explain how those things work. And I just don't want to have to keep up with it. If I can stay in my lane and be really, really good at what I do and continue to drive income that way, I'm going to do that 100% of the time. And then I'm going to find somebody that I consider equally as good that's an expert in the things that I can't or don't want to be an expert in. And I'm going to align myself with them. So that's a whole reason that I wanted to have Jessica come on the podcast today. We talked shortly after she and her husband were in Key West for Producers in Paradise. I'm like, we just need to get you out here because this is truthfully, I get tons and tons of people wanting to know, who do you use for this? Who do you use for that? And now I can tell them. So before we get into all that, why don't you just give a little bit of your background, Jessica, and sort of let everybody know who you are and how you got to where you're at, and then we'll dive in and start hammering it.
Yeah, absolutely. First off, thanks for having me. I'm excited to be here. I got into insurance when I was 19. I had never done anything else but insurance.
So you've been in for 3 years.
Yep.
You look like you're 22.
Thank you. Definitely not 22. I have 4 kids. That would be having them
In West
really
Virginia,
young.
you'd only be 21 then.
Yeah, so I got in at 19, haven't done anything else. I started on the captive side with American Family, and then transitioned to launching an independent agency. The independent agency wasn't originally set up, or starting PCRG wasn't originally set up like we're gonna be a high net worth agency. I had never done high net worth coming from the captive model, but within the first 2 years, because we partnered with financial planning firms, it became very apparent that that was going to be our model going forward, and that we needed to learn it and we needed to get really good at it to support the referrals that were naturally coming in. And then it was also never an intention to offer the markets and high net worth through a referral program to other agencies. But that naturally evolved with other agency owners reaching out, or other producers reaching out and saying, I have nowhere to place this. I have no idea how to place it. Exactly what you said. I don't want to lose their commercial. I don't want to lose a section of the account. Can you help me place the $10 million home or $5 million home or a large excess without taking the rest of the accounts? Absolutely. And that's how we started into that division of PCRG, is being able to help place those risks. So that's how we really got to this call right now.
Yeah, well, and the thing is too, like the high net worth space is not that far removed from like there's high net worth that could be middle market accounts, let alone small commercial. I mean, so it's not like it's not a lucrative segment to be in. I just think that a lot of people get scared when you start dealing with the types of like there's just a lot of complexities, man. These people sit on boards of directors. They have crap they never ever tell you about. It's just I enjoyed it. Like I remember when we first launched Baldwin back in 04 or 05, we didn't even have an agency management system yet. So everything was handwritten paper accords until we started getting our technology built out. And I had never worked on any kind of personal lines, let alone high net worth. So I just basically did what I would do for anything commercial, and would go online and go to the property appraiser's website and find. And so I'm identifying elevators in these homes, and I'm asking questions about mechanical breakdown and all of this other stuff. And the Laura's like, holy crap, are you sure you want to do commercial? Like you're actually looking into this stuff in a way most people wouldn't. And I'm like, no, I'm good where I'm at. I'm doing this to help you out because this is all hands on deck thing. But I learned a lot, man, about the buyer persona and how to relate to these people. And, take it even a step further. A lot of them too don't even handle this stuff. Like if you start getting into the really ultra wealthy people, this is not a one-on-one thing with the client. You're typically dealing, I would imagine you deal with this all the time with a family office or somebody who's managing it on their behalf. And I mean, that's something I'm interested in hearing you talk about a little bit if you can, because that was just starting out back in the early 2000s. Family offices like were probably around, but it wasn't nearly as prevalent is what I feel like it is today. But and maybe it's just because I'm running in different circles today than I was 20 years ago too. But I do feel like that's a nuance that a lot of people aren't aware of. And by the way, probably really good referral partners, if you can get in with, good family office people, they're going to continue to feed you.
Yeah, I mean, family office is definitely a concept that's growing rapidly. We do work with a lot of personal assistants, and but with the family office component, the one thing that's unique about family office and kind of a challenge that I didn't anticipate to run into over the years is now family offices are starting to integrate insurance in within their family office.
Oh,
And so we are running into that a little bit, not all of them, but they're definitely starting to launch some in-house, which also puts the middle market accounts at risk as well, knowing that a family office is going to launch the insurance in-house
Puts them
relationship.
substantially more at risk.
Yeah, I mean they're managing everything, right? And so that was something new that I ran into this year when I had two family office relationships that brought insurance in-house.
Hmm. Interesting.
interesting. So if you were giving advice to somebody who maybe hasn't had the conversation, certainly they're not going to try and place it, but they needed to begin the conversation with their perceived high net worth person so that they could warm it up and hand it over to your team. How do you start that conversation with these people?
Yeah, it's not going to really be any different than an initial fact finding gathering. Usually, the handoff comes to us once they've already gathered the information and realized that they have way more information on a house, that they have the capabilities of. They don't have market access, they don't have the staffing support and whatnot to handle it, or the underwriting knowledge on how to underwrite a home that has more than most. And so I would say it doesn't change much in the fact finding stage. You have to get to that point where you realize that maybe it's not within your capacity, or you're doing the client a disservice by continuing to run with it yourself. But I do find that when it kind of gets passed off and they haven't done all of the fact finding on the front end, that it's a lot, and they don't really understand the risk that they're passing to us, that it becomes a lot more complex for everyone involved. And so there really needs to be an understanding of the entire portfolio that's coming over, and that the entire thing has to come over. We can't just take a single home, or we can't just take a single Lamborghini. We're going to have to move the entire portfolio, especially if we're getting into 10, 20, 30, 40, 50 limit excess, where there's no way that the underwriter is going to put that excess limit over it if we don't have the entire portfolio or know exactly what's going on. So I think that's really important, knowing exactly what you got and exactly that, where it's at, and that it needs to come over together.
Is
It's
there any
interesting too on the umbrella side and the excess side specifically. That's I think everybody's struggling to get limit. And I mean, even on our normalized personalized business here, auto owners with our, being our top carrier has come in and basically said, we're not writing umbrella above a certain amount right now. I want to be clear, this isn't a knock on auto owners, but we only have a handful of carriers we can write umbrella with to begin with. Some of the monoline people have dried up and completely gone out of the state of Florida altogether. I remember back in the day, it was Chubb, AIG, and Fireman's Fund. Those were the three horses that we rode, and each one of them had different minimums, but you really didn't have to go too far outside of those three to be able to write anything. And I know that landscape has completely changed. And I do think that, if I'm looking to if I'm looking, so I want to be clear. If you're a producer in the middle market and you're kind of tuning out on what I'm saying, I would encourage you to listen to what I'm saying right now, because this could be the difference between you keeping an account and losing it. But one of the things we should be talking to our CEOs and CFOs about is their own personal liability relative to just the visibility they have in public. And I think a lot of times, depending on which seat they sit in, like if you're a CEO that came from a sales background that's more of a gunslinger, they're not going to think through everything the same way as maybe that CFO that started and worked their way up to the top and they're just holding on to protect everything they can. The CEO may not think about the fact that they have rental houses and multiple, watercraft, and they're bringing the sorority sisters down on spring break for their daughter to have them do jet ski races, like all of the crap, right? And those are always the people that are going to have the claim. But I think that if you're having the commercial conversation, you're not doing yourself a service at all if you don't at least talk to them about their personal situation, even if you're not the one who's going to place it. Like, you need to do that, because if you don't, somebody else is going to. And in my experience, Marsh has private client, Aon has private client, like all of them have high net worth divisions, but guess what else they have? Property and casualty, benefits, all of the other things that you're going to do and going to get paid on. And so I think that talking about umbrella and excess liability is extremely important, just as part of your normal renewal conversation and everything, because God forbid they ever had something happen. Like, take all of the financial mechanisms and everything away. God forbid anything happened to somebody that you've likely developed a great relationship with over the years, and they've got a claim that would go well into an umbrella layer, and you never had the conversation with them. How awesome are you going to feel about yourself at that point? Probably not too good, but it also is a very protective measure for you to preserve your book of business and keep other people out. I'm interested in so all that to say, landscape, like what is that landscape right now, specific to umbrella and excess? But I mean, maybe even talk a little bit about what the landscape of carriers looks like now. I do know, I mentioned it prior, there's reciprocals, there's regular carriers, some of this stuff has the ability to be accessible depending. Maybe just talk a little bit about how the landscape's changed over the last several years, since you've been in this.
Yeah, absolutely. So first, I want to comment on what you said on umbrella and doing your client a disservice by not asking about it. I actually think that's the easiest way to pivot from a middle market account is lead with the umbrella when you're making the introduction on the private client side. It does seem a little bit of outside of left field if you start talking about their home value, if they are your middle market account, but if you start talking about, do you have the right liability and do you have the right excess in place to protect the revenue that is coming from the middle market account and the business and whatnot, and what have they done to protect themselves, specifically if they are now become a social figure and it's really easy to Google them and their business and kind of figure out exactly what they're worth. Opening the conversation that way, that's it's a natural place to be, and I don't think that's going to come off as a weird ask to make sure that they're protecting themselves from the revenue that they're getting from the business on the personal side, and make sure that they have that in place. Because a lot of middle market business owners, high net worth and Chubb initially was created more for like the generational wealth and old money. And so having the umbrella conversations early on was something that people were coming in and knew about. There's such a big transfer of wealth and new money from business owners and tech and whatnot that it's not something that is very well educated on the personal line side and how they tie together. So lead with that. But that being said, just like on the commercial lines excess, it's harder to get higher limits. And so, even here in Washington State, which is where I'm at right now, and where the agency is headquartered, State Farm actually just withdrew from umbrella altogether. They're not even offering $1 million. You can't get an umbrella policy with State Farm in Washington State. And so that's really telling as to what's going on, especially in those more litigious states, that the carriers are being, they're tightening their belt. It doesn't mean that you can't get it. It's just that you gotta stack it. You may get the first, 10 or 15 million with with Pure or Cincinnati, and then most of them have an excess division as well that support those higher umbrella limits. And so it is working and having the discussion, but I do think that that's why it also opens up an opportunity for middle market, for the agencies that are offering high net worth and middle market, is because when you've got to underwrite a $20 million umbrella or $30 million umbrella, they're asking a lot of questions about their business. That means me as the agent is finding out a lot about their business just through the underwriting process, and diving into financials and really making sure what they're underwriting. And so I think that those conversations, as umbrella has become more difficult to secure, has actually opened up a risk for middle market commercial even more so, to make sure that you're controlling or at least understand where the personal lines is going.
Yeah. So let me ask you this, with capacity drying up, and again, the high net worth market has always played by different rules because it's a far more heavily underwritten product. So I do feel like the underwriters feel like they get their arms around risk way better than if we're just going to a rater to throw it out to 5 different carriers and have it come back with stuff. But are you at a point where you can, if you need that, 20 to 50 million in umbrella, are you able to do that with one carrier, or are you having to write it in towers like we do on big property scale, or even umbrella for that matter in middle market?
Professional.
Yeah.
Yeah, I mean, it really depends on what they're coming from, right? It's really difficult to go from somebody that's like, I have a $2 million umbrella right now, but between the work that we do with their family office or we do with their financial advisor, we determine that they need a $30 million umbrella, which is not uncommon. Yeah, I mean, we're able to get there, but maybe not right away, right? It definitely takes a little bit of time to get there. So we're gonna bump it up to whatever the underwriter is gonna be willing to give us.
Yeah,
Then.
it's funny you even say that. That's something I never even would have thought of, right? Because in the commercial world, and Grant, I mean, a $30 million umbrella for a middle market company is probably a far more frequent ask than a $30 million umbrella for an individual. But I mean, carrier wouldn't even bat an eye at that. You're either going to go get it in one place, which is highly unlikely, or you're going to get 5 or 10, and then you're going to write, 10 or 15 X of whatever, and then whatever X of that. But nobody ever, like, yeah, they underwrite it, they look at loss runs, and I mean, no disrespect to the people who write this stuff, but I don't know that they really, to me, it doesn't feel like it's like a really real depth. And why do you need a $30 million umbrella all of a sudden? Why do you, in personal, I think it is. It's something that's probably they're a lot more conservative with who they're going to give limit to. And for you to even say that, it kind of goes into the conversation that we were having with Warren Cleveland prior to jumping on with you about captives. This is a strategic conversation. If you need to be a strategist. It's not just getting as many quotes as you can from a rater and then presenting the cheapest or whatever else. You need to understand everything about these people's lifestyle, their business, what, all of the things that they do. And I mean, even to that point, kidnap and ransom and all of the other stuff that a lot of these high net worth, because I can remember that was a huge selling point back in the day for Chubb, is they had the Ackerman group, like everybody, the Ackerman guy, everybody loved it when he would talk because he was like ex-special forces, and he would tell all the stories about extracting people from dangerous situations or negotiating for hostages and things like that. But I mean, those are things that you're not even going to think about, man. Like I've started as I've been more publicly visible and I've accumulated some decent things. Like I don't think about somebody viewing me as a kidnap and ransom target. I just don't take my nice stuff with me when I travel. That's my risk management, so that I don't get knifed because somebody wants a Rolex or whatever, right? But I think that we don't think that way, man. And I half joked with my team of VAs who are over in Pakistan because they always want to know when I'm going to come visit. And I'm like, oh, I don't know about never. Like, do you people realize I'm 6'4" and I'm going to stick out like a sore thumb when I come over there? And somebody is going to wonder why I'm there, what I'm doing, and I'm going to become a target at that point. But that's not relegated to just that one spot. These people travel all over the place. They do all kinds of things. You see them at charity, fundraisers, presenting big checks. Like, I'm not a criminal, so I don't do online research like a criminal, but I believe that if I was, a lot of the stuff that these people do in their life is very, very public.
Yeah, everybody puts it on social
And
media
you
that they're
have, yeah,
wherever
you have
they
to look
are.
at
That's
it.
why I get pissed with Elise. I'm like, don't fucking tell people that we are wherever we are. Post some shit after we get home.
Yeah,
Yeah.
I mean that was something that was because, like I said, I didn't initially work in the high net worth space. So when I started working with ultra high net worth clients, the kidnap and ransom discussion was something that started coming up regularly more as a concern from client, and then obviously the cyber side of things and making sure that the home has that, the product has that built in. That's become another big hot topic for, ultra high net worth, making sure that they have some of that coverage. And so kidnap and ransom and cyber, definitely not a conversation that I was regularly having in the standard market or as a captive agent. And they're important conversations that do come up, and a lot of times are brought up by the client themselves, just out of pure, either having an experience, knowing somebody close to them, being on a public platform and whatnot, that is a huge concern. And going back to the umbrella, those are type of questions that if they're a public figure, it is hard. Like that's the hardest umbrella I got to underwrite, by
Public
far.
figures and like athletes and stuff is what I remember specifically because we had quite a few of the Tampa Bay Bucks and the Lightning people that we insured back then. And that was always like there were a lot of obstacles there that you had to overcome to be able to get the umbrella placed for them and then also get enough limit.
Yeah, I mean athletes are really challenging because of their age too, right?
Yeah.
You gotta, a 21-year-old, 22-year-old that's got, driving a $500,000 car and regularly, and they got two speeding tickets, and they need a $20 million. It's just not happening.
Kyle,
Like,
who's the guy that was the safety that we drafted so high, probably 15 years ago, that had all kinds of problems? Incredible, incredible player.
What did he turn into an incredible player with the Bucks, or was he an incredible player in
No, he
college
was
and
a
then
good. He
sucked
was a
with the
high
Bucks?
draft pick coming out of, and he did well with the Bucks. But then we got rid of him.
Oh, it was Aqib Talib.
That's him,
He
100%.
fucking punched the guy, the cab driver, in the back of
He's
the
the
head
guy.
like an
He is
idiot.
exactly what she just said. We
Yeah,
insured him. We
yeah.
insured him, and it was one of those deals where he was young, and it actually he rented the home he was in. He rented from somebody who had a rental property that I worked with at the agency. But it was just hearing them go through that and then watching, like questioning, like, is it really that big of a deal? But then watching how this guy acted when you'd see him on the news, it's like, okay, it makes perfect sense to me. Like, could you imagine writing an umbrella for Antonio Brown?
no.
Like, I
This-
couldn't even begin.
Uh, yeah, man. I mean, unfortunately, I feel like that happens a lot in the NFL specifically.
Yeah,
Yeah,
I
no,
mean, I think that is the difference, like I said earlier, from generational wealth to new money, young money, which would be, athletes, tech and whatnot that are coming in, is they have this insurance junk drawer, right? They buy a rental home, they throw it in the junk drawer. They buy a Lamborghini, they get a separate policy on that. They buy a Bentley, they get a separate policy, and they just have this junk drawer that's uncoordinated. And usually, I mean, I love working on those complex ones, but they're the messiest portfolios that come across, and they're also the ones that are going to be scrutinized the most by underwriting and probably need the liability the most. But underwriters know that. So yeah, I mean, it's definitely gotten more challenging, but not that you can't get there. It's just no different than loss control on commercial. You got to coach them on how to get there. We can't just go from here to here because we asked for it.
Well, the other thing is, especially when it's younger people who are new money, specifically massive signing bonus, good salary, whatever, the number of people that tap them to invest in just random stuff as angel investors and everything else, and they think they're helping people out, but a lot of times getting your arms around where they've put their money, what they've invested it in, and whatever else that could create a liability situation for them personally is tough to navigate. Because I mean, in my experience, and again, I'm not throwing shade at anybody, but when you're talking about somebody younger who gets a lot of money really quickly, they don't have infrastructure for that. Somebody asks them for 25 grand, 50 grand for seed money for something. That's like, no, that's nothing to them at that point. They probably hand it off and they don't even remember what they got for it. You know what I mean? And now all of a sudden you realize that they've, bankrolled some sort of a company that may be socially damaging to them reputationally. Or, I mean, look, we could prognosticate for hours on all of the different things. Point being, people, if you've not done this or you're not doing this, you probably shouldn't like do it now. Refer to somebody who does. Like, that should be painfully obvious at this point, just on the first little bit of this conversation. So I do want to shift gears for a second, though, because I think one of the things that I really respect about you and Kyle the most is the fact that you live your life. Like, that's something that I feel it took me a long time to mentally get there. Just not because of anything other than I didn't grow up in that environment first and foremost. Like, the harder you worked, the more you were respected. My dad was not blue collar by any stretch. He was a corporate risk manager and he flew all over the world, but he was a corporate risk manager that flew all over the world. Like, he was working a lot. And and again, I want to be very clear, this isn't a knock, but he missed stuff. You know what I mean? He missed baseball games, he missed moments here and there. And I understand as an adult, you can step back and say, Dad was just trying to do what he could to put food on the table and make sure that we were getting the life that he wanted us to have. You can't hold that against somebody. But from a child's perspective, you look at it like, man, I really wish Dad would have been here. I struck out 12 tonight in 5 innings. He would have really been proud of me. And we didn't have the ability to have that stuff on the internet or whatever back when I was in high school. So when I had started building my family and had my own kids, that's the number one driver. When Grayson was 2, he's 23 now, that I got out of retail, which led me to the insurance industry. I just said, I'm not going to be a slave to a company who doesn't really care, that'll replace me literally tomorrow if I walk out the front door. But I'm working 100 hours a week and I'm making good money, but my hourly rate sucks and my work-life balance is terrible. And I'll be dead by the time I'm 45 because I'm running myself into the ground. And so I got into the insurance industry, and that's not an easy walk either. I had to hit the grind for a long time. But when I finally got to the point where I launched Florida Risk in 2016 and I had more control over what my schedule was going to look like and what I was going to do, I just drew a line in the sand and said, this is it for me. Like, I'm going to do what I want to do when I want to do it. I have the ability to fund it because I can be in control of my own income, but I don't have to work 100 hours a week for me to be able to live a very comfortable life, be present in everything that my kids do. And if we want to travel, be able to travel comfortably, do it the right way, and afford to do it without racking up a bunch of debt. Like, I just made the decision and then I acted on it, and we've pretty much lived that out and done it. And I'm not going to say every single decision that I make is probably the most financially sound in my personal life, but I don't care because I know that money doesn't earn interest in a coffin, and I'd much rather die with memories than dreams. So when the opportunity comes for me to go get the concert tickets at Red Rock, I'm going to buy them. Like, when and I went like 3 weeks ago, Eric Church was at Red Rock. I remember when I saw that drop, didn't even ask Annie. I knew that she was going to be on board with it. Went, got the tickets, booked the plane tickets, made sure Grayson could watch the younger kids, and we were off to the races. And it's not even a second thought at this point. Whereas before, I'd arrest, do I really want to spend the money? Do I really have the time? No, I'm going to figure out a way to get shit done while I'm traveling, period. That's how it works.
So what was your, we haven't talked about this, but like, what was your impression of Red Rocks? Because the Big Cat went to a concert the day after we left when we were just out there. He went to,
oh yeah,
it wasn't Eric Church. It was like some Queen cover band thing or whatever.
Oh, but I saw that they were being advertised though.
Yeah.
I would tell you that there are things in life, and I would put Alaska and New York City with this. There are things and experience in life that you have that people will give you their impression, prepare you for what you think it's going to be like, but there's really no words that can describe or put that just that first impression feeling. And that's what Alaska was like, because we didn't do a cruise. Like, I was living in rugged Alaska in a fishing camp when we went out there, but it was absolutely gorgeous. And just the nature and just the difference between when you're in Tampa, Florida, and being in the Kenai Peninsula in Alaska, it's just completely different, and it has to be experienced. And I told Grayson that about the first time that I took him to New York City with me. I said, I can tell you what it's like. I can try and prepare you for it. But until you actually walk out onto Fifth Avenue the first time and you look up and down and left and right and you see just how ridiculous all this stuff is that's here, that's gonna have its own impact on you. And I can't prepare you for that. I can try. And he's like, you were dead on the money when I took him the first time. He's like, there's literally nothing you could have said to me that would have prepared me for how I was going to feel and think when I saw that. And I just think with Red Rocks, I knew it was a cool place. I knew I wanted to go there just because it's like a very, it's a smaller venue. It's a more intimate experience from a concert standpoint. Will tell you, pleasantly surprised in the seating arrangement. Like, so they had bench seating and there was plenty of room, but there was plenty of room front to back. And like, my biggest pet peeve when I go to anything is I always buy tickets in the middle of the row, so I don't have to keep getting up and down for everybody who wants to go past me. And there, you don't even have to.
You better not have any drinks then.
Well, no, I'm like a camel, man. I can
bet you are.
7 or 8 hours straight. I can go and not have to excuse myself. So. But I would tell you what's really, really cool. Like, so the first thing is, when we pulled in, I did not realize how long of a hike it was to get up. Jessica, have you ever been there?
I have, but it's been.
It's crazy, right?
That's like, what my dad's. He was like, it's
when
like
you pull in, it's like, holy crap. That's it all the way up there.
Yeah.
Now, thankfully, you can walk part way and then you can catch a shuttle and it'll take you up to the top and you can ride that way. So if you're listening to this and you want to spend money to do it the right way and go to Red Rocks, just hire a black car to take you and wait for you, because that's how I do New York City at this point too. You'll thank me for that later. It may cost you $500, but you're not going to feel like you're going to have a heart attack. I don't care how good a shape you're in. That is a hike for anybody. So that's number one. Number two, I didn't expect the acoustics and everything to be as good as what they were. And it has to do with the science behind that place, like the type of rock it is and how it's positioned and how they've built the stage around it. Like, it was one of the best acoustic concerts from an acoustic standpoint that I've ever heard. It wasn't an acoustic performance. He was playing electric guitar and everything else. It's just, you didn't have, like, I hate going to Amalie Arena for a concert. I think their acoustics are terrible. There's reverb. You can't hear what people are saying. I prefer the amphitheater over it, but it was just really cool from that perspective too. There was a little bit of weed. I mean, there was a little bit of haze that was floating over. If you're into
Colorado,
if you're into the contact high, you're probably not going to want to be drug tested when you go to work Monday morning. But it wasn't. I would also say I wouldn't let that keep you from going. People told me that it was going to be way worse than what I actually felt it was. So that part wasn't that big of a deal. But I think everybody should go to a concert there. And if you can go for an artist that you really like, it's going to be a completely different experience than seeing them in concert anywhere else. And I'll leave with that by saying, you could tell that Eric Church, the performer, it was the first night of a three night set that he was doing. He was emotionally moved to be performing there. Like, it was very, very obvious. He hadn't been there in 9 years. He had his wife and his kids with him, and he's not the kind of guy that's going to get up and get emotional on stage. I've seen him probably 6 or 7 times prior. He was moved dramatically by being able to perform to a sold out crowd there. And like, my favorite part of the whole thing is when he was performing Springsteen and it gets to the whoa, 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 that part, cut all the music and the whole crowd was just vibing. It was awesome. So that's it. That's all I'm going to say about that, to steal a line from Forrest Gump. But really cool place. I think everybody should go. But I mean, so Jessica, the whole point is, how do you balance that, right? I know from my perspective, I try and do as good a job as I can. I'm fortunate in that my oldest son has the ability to watch, Grayson's 23. He can watch Ethan and Caroline, who are 14 and 12 respectively, and they respect him. So I've got built-in childcare, which makes life a whole lot easier for me from that perspective. But from a work perspective, that's a little bit more of a challenge, because a lot of the stuff that my clients are going to reach out to me for, I'm really the only one who can do it, because it's a knowledge question more than it is something that just needs to be processed or whatever. So knowing that our agencies are completely different, and you likely have a much higher customer count than what I do, because we have fewer customers but a higher average account size based on revenue. Like, I would imagine, and by the way, a higher customer and policy count from what I would perceive to be a very demanding client base who's going to expect service like right now. How have you set yourself up to do that? Because it has to start with just how your organization's structured to begin with, for you to be able to step away and enjoy doing the things that you do.
Yeah, no, I mean, it wasn't something that has just happened overnight. I actually really struggled with delegation and not being on all the time up until about 2 years ago. And 2 years ago, I kind of just had a breaking point of, I was doing it. I was in the agency, and I was, there for everyone on my team and answering all the questions at any given time and being there at my kids' events. But I was physically there, but was I actually really there, or was I sitting at their event, but texting somebody on my team or texting a client and putting out a fire? And that's where I was. And I was kind of living my life of like, this is just how it is. Just make it work. Just make it work. And about 2 years ago, I was like, not that I had like a mental breakdown, but I had a breaking point where I was like, I don't want to just make it work anymore. Like, I want to make it work for me. And so that's when I made some drastic changes in the way that I ran the agency, and also on the family side as well. But leaning on, my kids are a lot younger than yours. My youngest is 4, and my oldest is 14. So not quite at that point where I have built-in childcare, and so had to lean on having help and be okay with having help. And on the personal side, I did have to adjust and be okay with not being at everything, and it's okay for me to miss something, because I know that I have, I'm going to be at whatever I can. But every once in a while, like, I would really hold on to that if I missed something. And now I just let it go a bit and realize that I have 4 kids and a 5th kid, if you want to call my company a kid as well, raised from the ground up. And so just be okay not being at everything. And then, but on the business side, I had to set really, really strict boundaries. So I had to bring in I hired my VP, Anthony. He's fabulous. And it took me a long time to recruit him and figure out who is somebody who his strengths complement my weaknesses. And he's able to take the things that I just hate doing in the agency, and that I'm just really not great at, and that's probably why I hate doing them, and delegate those type of things. I also had to have really strict conversations with my team and let them know, like, your access to me has changed. I'm still going to be here, but I'm not going to be available to take your call after 5 o'clock. Like, that's my family time. If you call me, it's not going to happen. I'm not going to answer. I'm not going to, and same thing on vacation, setting those boundaries of, this is when I work. And so I just got really intentional at setting boundaries and communicating those boundaries with my team and with my family, and then getting rid of the stuff that wasn't bringing me happiness. My life has really transformed from a work-life balance blend in the last 2 years by setting those boundaries, communicating the boundaries, and abiding by those boundaries. And that's that's really how I'm able to manage it. Because if I would have kept on the path of, as my team's growing and as my kids are getting older and getting involved in all of the sports and all of the things, just make it work was not going to continue to work. I would have burnt out.
Mhm.
How'd your team respond to that? I mean, have they been how like what was the learning period there for, oh, she's serious. Like she's not going to answer at 5:05 anymore or whatever. Like how long did it take to start to get that stuff to die down a little bit? And I want to be clear, like nobody really bothers me, I don't think, after hours, and if they do, it's because they need me, and I don't have an issue with that because it's so infrequent. Like Kyle and I may go back and forth on text about something, but it's never like I even expect him to answer if I ask him something after hours or vice versa, but we typically do. But it's also not intrusive in anything that I'm doing, right? I would think that if I had a team of people who were constantly reaching out to me and not respecting boundaries, and maybe quite frankly, because I hadn't set the boundaries, there's got to be a curve here. Like, how did you navigate that? How long did it take for that to become normalized?
Yeah, I mean, my team is amazing, and I would never say that they were abusing boundaries, that I just hadn't set them, right? And so,
Yeah, that's why I said it the way
um,
I did, because I think that's probably like I can't in clients are probably are definitely more notorious for after hours text. Like yesterday, I'm boarding a plane in Kansas City, and a guy that I've represented for like 15 years sends me 3 screenshots of something in a text saying, can you please get this handled for me right now? And it had to do with issuing a certificate of insurance, and I wrote back to him, I'm like, dude, if you just made this the most difficult way to get this task done. Like, I'm not in the office. I'm now going to have to save attachments to my phone to turn around and send an email to the person who does this, then insert the attachments. Like, it's just like, why didn't you send this to Nicole to begin with? Like, that's who you need to send this to. I've graduated from, Davey the certificate monkey 15 years ago. I'm just not going to do it
not gonna do
anymore.
it. Yeah,
And
no,
it's crazy. So for those people, Annie like will be somewhere and she's like, these people, man, they don't respect your boundaries. They just, you know what? And then I have to step back and say, to be completely honest with you, I can't hold it against them. I've never identified that there are boundaries.
Some
Yeah,
of it's
I mean,
common
and
sense
and
though,
that's
not
it. My team, the way that they reacted to it was great, because I had to get comfortable having uncomfortable conversations and being, especially with my team, right, who I'm with all the time. I had to be vulnerable with them. I had to let them know where I had gotten in a personal and work life balance and why I was doing this. And I really had to paint that picture of, it's not because of something that you did. It's something that I need for myself, and where I had gotten, and having those conversations and explaining the why behind it. I always say to my team, all the time, like the phrase that probably comes out of my mouth the most, is no news is worse than bad news. And so explaining, instead of just saying your access to me has changed, I'm not answering calls at 5 o'clock, I'm not going to be, responding to eat, like whatever it is, whatever those boundaries are. I like they're gonna assume the worst, right? They're gonna assume that I'm tapping out of the business and that I'm no longer engaged, and that I'm getting to a point, whatever it is. I just told them exactly why and had to be really vulnerable with them. And that's what made the difference. It was an immediate transition. Like right then they understood why I needed to do it. And it's worked, and it's continued to work. And every time I can start to see the pendulum going the other way again, and have to kind of regroup on my boundaries, it's just going back to the human side of the business and explaining why I got to get back there. And I do the same thing with clients, right? If a client reaches out to me on a Sunday afternoon, and they're just, I'm with my family, I'm with my kids, send it here on Monday, or I have clients all the time that I run into at social settings, and they'll start to ask me about their insurance. And I'm like, I'm sorry, like, I'm not going to have that conversation with you. Like, we're here for, a cancer research event. Like,
Yeah, like we're raising money for childhood cancer, lady.
yeah. So
Get off of me
let's talk
about your
about your
auto
insurance
loans.
on Monday. Call me on Monday. We'll talk about it. But just not letting insurance become my identity and who I was, and it didn't have to control every conversation and every aspect of and consuming moment of my life, which I really felt like it had started to become. And so that's kind of where we're at now. Is it's allowed me to do more travel and be at my kids' stuff and be there and be more present. And it's just having those vulnerable conversations that got me there.
Yeah, and I think the other thing is like sometimes I just question people's common sense.
Well, that's
Like
what I'm saying. Like on
it's
the like
3:30 on a
the
Sunday. Do you
client
really think I'm
side, it's
sitting in
like
front of my computer waiting to handle this?
yeah, like on the customer side, it's absurd. I mean, it's
And
like,
why didn't
dude,
you call the office line if you thought that? Like, why are you
the
calling myself?
but I think
the
people
best
just
thing I
think we're
can think
sitting
is
around
that,
at a
like,
call center and like we're just like Geico's call center. Like I really don't get it. For employees, and coworkers and stuff, it's a totally different dynamic. And it, like you said, it was an immediate thing. If it was an immediate thing, like they shouldn't be part of the organization. Like that's crazy. Like for them to not accept something like that after you've explained the why behind it. I just think like from a customer standpoint, it's like, bro, why are
yeah,
you
I mean,
calling me
obviously you
right
got
now?
the Geicos and whatnot that have changed, commoditized insurance to where it is now, where it's 24/7 call centers and whatnot. That's something I think will always continue. We live in an instant gratification world now, and I think that's something that we're always going to struggle with. Is
Well, it's also
adapting
reasons why
to.
companies like Glovebox exist, right? To be able to go in and make people self-serve this stuff. Like they can do these things faster in an app environment than they can picking up the phone and calling them. And but there stuff like that has its own challenges too because it's got to get widely adopted by the industry first, then pushed out to clients to get them to believe in it. But what those guys are doing over at Glovebox right now. I made the comment when I was in Denver talking with Ryan and Sean. Like I firmly believe that with that marketplace and that technology alone, combined with a couple of other pieces of tech that I have here at the agency, you could be a good producer and just augment support staff as needed. And I could grow an agent. There's no question in my mind. I could individually grow an agency to $10 million in revenue. If all I had to do was focus on closing deals and leveraging technology, hands down, no issues. I would hire my wife to be the COO because she's far better at that end of things than what I am. But that would be it. And I mean, I'm not saying I'm getting rid of Kyle and everybody that's here now, but I think that when you're in these shoes, you always look back and say, if I were to do it over again, or if I would have changed something, what would I have done? And if I could do it to 10 million with one, why couldn't I do it to 20 million with two? It's kind of the other way of looking at it. But I just think that we're in a position now where we can still have the work-life balance. We can travel with AI and where tech is headed specifically. It's going to be, especially agentic AI, we're going to be in a position where the sky's the limit for what we scale, and we're not going to have to sacrifice anything in our life to get there.
Absolutely. I mean, obviously, work remotely and work from anywhere and being able to access things, and it changes the way that our industry specifically can do business. And I mean, and AI is just, it's such a
Well,
big.
COVID paved the way for that, right? So
Abs-
I don't, not that anything is a positive coming out of a pandemic. I mean, we can agree on that. But if you look for the silver lining in anything negative, you're always going to find, reasonably good things too that happened as a result, even if it's like advancing medical research or whatever as a result of it. But in that case specifically, when everything was forced to shut down, number one, it was a really good preview of what natural selection looks like because the agencies that weren't able to digitally flip the switch really, really struggled bad. But those people who were like for us to go remote, it's just like, all right, everybody, you can work from home now. because we already have the VPN. We already have Hawksoft served locally on our server. Nothing really changed other than we just didn't work in the office in person because that's what everybody was doing. But if you look at it now, 3-4 years later, what it was really doing was changing the entire way we do business. Because I don't have to, not that I mind going out and meeting with people in person, but my first appointments are on Zoom at this point, most of the time, and I can get more of them done. And I can record them. I can use them to train staff. I can use them in Killing Commercial. I can use them to go back and see what I could have done better myself. I can create content from that stuff. Like there's a million things that I can give you that COVID changed for us specifically because we were forced to do something that was actually probably a pretty good business decision from the beginning. We just want to keep everything. And I struggle with it even today. Like there are things that I feel like if everybody was here in the office wouldn't slip through the cracks sometimes, but they've gotten much fewer and farther between than where it was originally. And I think that's really one of the biggest differences that makes it easier to pivot and do the things that we do.
Yeah, Kyle and I talk about that all the time, that COVID changed things for us for the better, as awful as it was. I mean, especially on his side, financial planning had really strict boundaries as to being in the office and protecting client data. So there was a lot of things that had to be quickly approved that allowed, and they've kept them. And so when we, if any of like you follow me on social media, you see we're all over the place, and able to work from, and that wasn't a thing for our family prior to COVID.
No, I mean, you were in Italy, Japan, Key West. I mean, God knows where in between. But I mean, that's just what I can recall off of the top of my head. And all of that's within the last 6 months.
Yeah, like the last 3 months.
So, I mean,
it's been a lot. And we took our kids with us. So that was.
And that's invaluable for your kids to get that kind of experience. We have a trip to the Amalfi Coast this next year, and we were struggling with what we were going to do with Ethan and Caroline. And I finally told Andrea, I'm like, we need to find out if the place that we're staying, if we can upgrade to, because it was a trip we got at a fundraiser and a live auction. And the trick is they sell you one thing, but then they give you a bunch of upsells once you start to book the trip. Like, oh, well, you can get the 8-bedroom villa for this much or whatever. So I said, if they give you the opportunity to upgrade, just tell them we'll take it, and we're going to take Ethan and Caroline with us. And she said, but they're going to miss school for a week. And I'm like, they're going to get a far greater education in that week than they're ever going to get in school. And I mean, I meant to ask you, do you homeschool them, or are they in public school, or do remote learning, or how does that work?
Yeah, they're in public school.
That's awesome. I love it. And I'm exactly the same way. Because, I mean, when I was a kid, it was like, you don't miss school under any circumstances ever. And I'm completely the opposite. I'm like, no, I'm not going to tell you about it. I'm going to show it to you. Let me go. You're going to retain all of that way more than you're ever going to get it out of a book. So where do they get a hold of you? We've been going a long time. I want to be respectful of your time. I know Kyle's probably digesting his own stomach by now because he was giving me
hungry, bro.
What's that?
I'm hungry, bro.
Yeah, I know. So where do they get a hold of you, Jessica? How can they reach out and learn more about what you're doing at PCRG? How can they refer business? How can they begin that dialogue?
Yeah, email's definitely the best. And it's just Jessica at PCRGinsurance.com.
We will have it in the notes for the show. Thanks for spending an hour chatting with us. Really enjoyed it. Look forward to watching you continue to grow, both in your high net worth and your commercial. And we'll keep the dialogue going. If you have high net worth needs and you're not meeting them for your clients, I can't think of anybody better for you to refer to. So make sure you reach out to Jessica. We'll catch you guys next time. See ya.